look who's here now. Eddie Gabor, the man himself. All right, Eddie, are you still selling into this rally the way you've said you were selling for the last couple of months?
Absolutely, Stuart. I think this is nothing more than a bear market bounce. And look, there's two camps right now. There's the one camp that says because we've had a 50% retracement from the lows that this is the start of a new bull market. And then there's our team, and we believe that this is not the start of a new bull market. And it's really as simple as this. Let's not overthink this. As an investor, ask yourself, do you think the Fed can engineer a soft landing? If you think they do, then you're fine taking risk on. I don't think there's any way in hell they're going to be able to navigate a soft landing. And if they don't, you're going to see the market crash, in our opinion. And a crash means go back down to 20% or lower. And look, here's another thing that I find very interesting. I've shared with your viewers, we've been buying utilities this year. Of the last several days with this rally, utilities have done pretty well. So this is really a risk-on rally. Why is something as defensive as utilities doing well? So playing defense doesn't mean you can't make money. It means you need to manage volatility and be prepared for what potentially is coming over the next few months.
Okay, now you've consistently said that the second quarter of this year, which begins, I believe, on Friday, April the 1st, the second quarter begins then, you said that's the time for the big sell-off. You're still holding to that. You still think we'll be down. You say we're going to crash down 20% in the second quarter. You're still holding to that?
So I do. I think that this market, when we look at where it ends, will be down 20%, and here's why. We have earnings coming through. We have the Fed that's going to be more aggressive on their rate hikes. How is this market going to be able to continue to grow when we have a Fed that is basically deleveraging everything that they've done over the last several years? They are removing the drug that this market and economy has been on with free money and loose monetary policy. So I think earnings are going to be bad. I think GDP is going to be bad. And you have the Fed on top of that, is why I believe risk assets are going to be very troubled in this second quarter.
And a lot of us hope you're wrong, but you've not been wrong so far. You've been right. And we listen to you. Eddie Gabor, thanks for being here.
Well, you know, they say he's not been wrong so far. I mean, it's somewhat true, especially this year. When it comes to utilities, yeah, they performed well, but they have not performed as well as tech. So pretty much, you know, what him and a lot of other people are saying is that the beginning of Q2 of this year is actually going to be a crash. It's going to pull back 20%, or that's what he says. So that would also obviously apply to tech and the broader market. I don't agree. You know, I think that it's a really broad stroke to say there's going to be this huge pullback and things are going to get worse before they get better. He referred to the tech bounce pretty much all of March as just kind of a dead cat bounce, of kind of a temporary pullback and not a change of trend. You know, if you do TA, and I'm not a big fan of TA, you see that actually doesn't really look like that. Like the bounce that tech has broken that downtrend quite a bit, and I see there's a lot of buying pressure even on days when oil is up. So that signifies to me there's a lot more interest. I think that the all-time highs in tech are going to keep pushing the market forward. You know, people just see too much opportunity in tech, way too much opportunity. Recently, there was another clip that I wanted to play, which was the Fauci clip. You know, I'll play it right now.
But that is supposed to be happening now. We have Dr. Fauci. He says COVID restrictions could be coming back. Ouch. Watch this.
We should be prepared and flexible enough to pivot towards going back, at least temporarily, to a more rigid type of restrictions.
So anyway, the point is, there could be another lockdown. There already is in Shanghai, right? So these are things that are positive for e-commerce, for tech, you know, in the same way that having the, you know, the lockdown previously, you know, really propelled tech. So but either way, you know, like these things are small. I think there was already a recovery happening before the Ukraine conflict. That's what I've been saying. So I don't really think that you should be too scared. However, like I said, I try to bounce. Today I'm in oil. I'm going to go back in tech when I see the opportunity. Just be careful. I really see Q2 as a recovery, not as a you know, a big sell-off. Highly depends on news. So to say just a blanket statement like I think everything's going to pull back 20%, how are you going to say that without knowing what's going to happen in April? You can't really say that, and it's sector specific, really. You know, every time something goes down, something goes up. So what is he saying? You know, oil's going to shoot up in April. You know, even though there are government regulations, inflation, all this different stuff and policies to try to manage it, I think that's priced in. So that's my opinion. What do you guys think? Thank you for tuning in. As always, buy red and sell green.